Welcome to TradeTheNBI.com. This is John. This report is for the 20th of December. And as we get close to a little holiday break before the end of the year, you can see the acceleration continues, no stop. I mean, the Powell call, um, at least compared to what they were doing from a Fed put before, clearly underway. And it's going to start to be interesting. And we can see some of the elements of how this is going to play out. While it certainly is going to boost things fairly early on, at least from an economic standpoint, but that's going to drive inflation further. So, is that really a bonus? Uncertain at this particular stage whether that's a political help or not, but certainly the behavior is strictly political because there's no other justification for changing their stance so radically within a few days. When we look at the daily chart, cyan under red still has not changed. Brief period where the steel dipped back below, but really didn't have any short strength whatsoever within that. And so we continue to build higher shakeouts. So it's all congruent. It doesn't mean we're not going to get some fillbacks in between. And again, we talked about that. The further away you get from the 76%, that parabolic nature, we've well exceeded an angle of 45 degrees, which means that you're going to get a pullback into that level somewhere in between. And that's where at least the ABM following that would be consistent for returns, and then monitoring the various positive extremes. It's interesting when you look at it, relatively speaking, the move from the NASDAQ a little bit more muted. Um, and that's probably just the reality of the catch up, because the NASDAQ had to slow down a bit from a relative term for the S&P to equalize itself. Didn't have to do that because most of the movement's been these high, top 8 selections, your Amazons, Microsofts, and that, the Apple. And if they experience problems, then you get theoretically a more outside move for the market, but hasn't been the case at this. For now, you've had the small caps, mid caps been bought up to fill in the space. What's interesting is Treasury is way out of whack to it, and that forces money to go into the market because this is substandard yield given where things are, and not that, just given where inflation outlook is. Because just because they're talking about rate cuts doesn't mean inflation is going to stop. As we see oil turning around back into the mid 70 range, you continue to see issues with the Red Sea, and the market already is very undervaluing that situation, the Houthi rebels in Yemen, and that. So there could be some significant global shocks, and that still probably is not priced in any way, shape, or form, given what we're seeing from the move, because certainly earnings aren't, handling the move, but you do have the other element of the devaluation of the dollar, which you see right here, because there's no reason the euro should be at the 110 range, and that's really just a serious move to help foreign countries with all of their debt repayments in dollars, and that they have decreased in dollar value certainly helps them. Does that do anything for the average consumer in America? No. From a gold standpoint, still very muted from its upside boom. You would expect a bit more strength into that, given the fact the Fed, if they are going to ease, that's going to definitely be a move towards gold, simply because of the erosion in value, because inflation is still going to be outside the target range for the Fed. And Bitcoin continuing right between this 176. No real change other than you still have the same cyan now here under red. So it's all green light for crypto at this particular stage. And same thing with ETH, been a little bit muted. Not surprising. And then for a 50K, pretty simple. I mean, straightforward run there. Took us out within that one, and then reopened up with the move. Uh, this brought us right back up to the 76. We're seeing a little softness at this particular stage. Nothing significant. When we look at it from an intraday standpoint, it was all pretty clean from the opening bell of pre-market. Boom, straight up, filled back just a little bit of it. There really weren't a whole lot of positive extremes that needed to be covered into that one. It wasn't until we got the spike here at the late part of the day that we ended up with the positive extremes right around the 48.15 range. And of course, the pre-market taking care of that one perfectly. The symmetry of it all, so nice. Anyway, that's the long and the short of it. Anything relevant, I will certainly put it up on the Skype chat. Have a good one.